When you are updating your cash book, start with the opening balance and then now include those items that are in the bank statement but missing here. So let us find them from the statements that we are given. Number one, we are told that a check of 140,200 received from a debtor had been dishonored. Remember that check when it was received, it was indicated on the debit side. When it was received, it was indicated on the debit side. Now that it has been dishonored, you record it on the credit side. Dishonored check was amounting to 140,200. Then the second item is a dividend received. The key thing there is to understand it was received. 2,400 had been reflected in the bank statement only. So it is recorded in the bank statement only. It is not recorded as received in the cash book. And in the cash book, the received amount is normally indicated on the debit. So you come here and record dividend. The dividends of 2,400 plus that on the debit side. Number three, a standing order payment of 15,000 shillings had been made by the bank. That one, whether you are told is appearing in the bank statement only or not, standing order, the bank charges, they are always going to be on the credit side of the updated cash book. So just right here, standing order of 15,000 was effected by the bank, and that one will always list in the cash book on the payment side because it is a payment that was made from our bank account. Then we are told that checks issued to suppliers amounting to 21,000 had not been presented. Those are unpresented checks, and never make a mistake of recording them here because they are already in the cash book. Then a commission of 550 had been charged by the bank for services. So it has been charged. So this one is a charge in our account. So it is reducing our money. So we just write there, commission charged of 550. It is a payment because it is reducing our money, and therefore it is on the credit side. And lastly, checks received from Timothy and Jane of 7,200 and 10,000 respectively had not yet been credited by the bank. Those are uncredited checks and they should not come here. So after doing that, we need to compute the balance for the updated cash book. We need to compute the balance for the updated cash book, and that simply means we add the amount that are on the receipt, we subtract the amount that are on the payment, we get the correct balance. 335, 100 plus 2,400. This one gives 337, 500. It looks like it is the one that is going to be more. 337, 500. So which figure are we going to take here for the total of 337, 500? That figure is now going to be our balance as updated cash. That is the balance as per updated cash. So we less 140,000 minus. If you less, you find it is coming to 181,950. 181,950. That is the balance as per updated cash. So the starting balance, we add any amount that we received but had not been recorded. We minus any amount that we had paid through the bank but had not been recorded in the cash book. So it will give us the updated or the correct amount that we were supposed to capture in our cash book bank column as the balance. Upon doing that, you can now proceed to the bank reconciliation. You can proceed to bank reconciliation statement. We came up with the two formats that you can be able to use.
Okay. Can you comment?
We can choose any format, but most cases we normally start with the balance as per the updated cash book. So you capture here balance as updated cash book, which is this figure 181,950. If you start with the balance as per the updated cash book, you add unpresented checks. You add unpresented checks, which in this particular question were amounting to how much? Let me find out. The unpresented checks, they are actually captured as number 4. They were amounting to 21,000. So if you add that to the balance as per the updated cash flow, you get to 2,950. Then you less uncredited checks. So here we have the check from Timothy and the other check from Jane. For Timothy, the check that was uncredited was having 7,300. And then for Jane is 10,000. So these two combined, they are going to give us 300. So the uncredited are 300. So we less that amount so that we can find the balance as per the bank statement. 202,950 minus 8,300. You get it is coming to 122,650. It comes to 122,650. Sorry. It comes to 122,650 like that. If I compare this figure, it's not coming as the same as the balance for the bank statement. Remember, on the introduction statement, we are told that the cash book bank column had a debit of 335,100, while the bank statement had a credit of 122,450. Yeah? So this one is supposed to be the same as that. I don't know whether there is somewhere we have done.
Excuse.
Yes.
Excuse, up there.
Yes.
That balance as per updated cash book, it should be 750.
Oh.
181,750.
Okay. Then I think that is where it is supposed to be like that. Right? So if this one is 750, this one will also be 750. And if you write this one will be 450. Actually, I think that is where we went wrong. So you realize that the balance you get here is supposed to be recorded as balance as the bank balance as per the bank statement, which is fifth, and which is should be the same as what we are given in the question. So you will allow me to copy this question on the board so that when I explain, you can be able to follow it. Allow me to do it or have it on the board. So you can be given an extract of a cash book and an extract of the bank statement instead of being given the statement that this one happened and this one did not happen. So you are given the two statements, the bank statement and the cash book. It is now for you to be able to determine what we need in preparing the updated cash book and the bank reconciliation statement. But the concept still remains the same. When you are updating your cash book, you use those items that are in the cash book, are in the bank statement, but missing in the cash book. And when you are preparing your bank reconciliation statement, you need to identify the unpresented checks and the uncredited checks. The concept still remains, but only that you are given the extract of this, and it is up to you now to read and extract those items as you need them. So when you are doing the updated cash book, or before I talk about that, it is worth actually pointing out this. In the cash book, we have got the debit and the credit side. The debit, it is meant to record the receipts, and the credit is meant to record the payments. Money being received and the credit money moving out in the form of checks. Then in the bank statement, equally, we are going to have the debit column and the credit column. The funny thing about this, it is actually they are opposite of one another. Whereas the debit of the cash book records the receipt, the debit of the bank statement is going to be recording the payments. And then the credit of the cash book, the credit side of the cash book records the payment, but the credit side of the bank statement, it records the receipts. They are actually like that. In the cash book, the debit, it means receipt. But in the bank statement, debit means a payment. That's why when you come to our bank statement that we have here, our bank statement that we have here, our bank statement that we have here, you can be able to find that the starting balance is 318,500 here, which is the same as the balance that we have here on the start of the month. So at the start of the month, that is November 1, the opening balance here is a debit balance. Here it is actually the same. So we started with the same balance. When we go to that, there was a deposit. Deposit means money coming in. This money coming in, you can be able to find that it is actually on the credit column. That's why we are saying the credit column records receipts. The credit column records receipt. But on the cash book, the debit side records receipt. So you have actually something like this. You have the cash book, debit, and credit. The bank statement. The bank statement, you also have the debit column, the credit column. So it is like they behave diagonally like that. What is on the debit side of the cash book, you can only find it on the credit side of the bank statement. What is the credit side of the cash book, you will find it on the debit side of the bank statement. They are not on the same side. They are not on the same sides. So that is what you need to remember. So whenever you are given the extra, just have it like this. The debit of the cash book is the same as the credit of the bank statement. So what will be required to do here in updating the cash book, you will come and write it like this. Updated cash book. Updated cash book. Credit and debit side. I want you to fit it here. The updated cash book. The debit and the credit. So what you do, always start with this closing balance. Don't use the opening balance. We are updating our cash book so that the closing balance of the cash book can be the same as the closing balance of the bank statement here. So what you update is the closing balance, not the opening balance. This one was the balance before the transactions took place. We want to update this particular balance after the transactions happen. So you start with it. And remember, whenever you have the balance carried down appearing on the credit, it simply means that this balance is a debit. It is a debit balance. And when you say that it's a debit balance, it simply means that it is the debit side that paid more than the credit side. So we had to indicate this balance here so that now the debit and the credit can balance. So this balance carried down, if it is indicated on the credit side, this is a debit balance. You capture it here as balance goes down to 88,900. And I think I've explained it well. Whenever carried down is on the credit, that simply means that it is the debit balance because it is the debit that had more. So we had to put this balance here because the credit had less, so that now the total can be the same. So that now the total can be the same. So a debit carried down is a credit balance, and a credit carried down is a debit balance. So we put it there. Then from there, if you want to update the debit side of the cash book, if you are interested in updating the debit side of the cash book, we say the corresponding entries are going to be found on the credit column. Are going to be found on the credit column. So the debit entries in the cash book are normally recorded on the credit column of the bank statement. And don't forget, when we are updating our cash book, what do? We use the items that are in the bank statement, but missing in the cash book. So we want to go to our bank statement and identify those items that are appearing on the credit side, and then we ask ourselves, if they are appearing on the credit side, are they also appearing on the debit side of the cash book? Anything that is going to appear on the credit side, but not on the debit side of the cash book, then that particular item must be included here because it was missing. So like for example, we have got 18,000. This 18,000, you come and ask yourself, do we have 18,000 here? And actually you can find that 18,000 is missing in the cash book. So you come here and that included, it is the deposit of 18,000. It is missing in the cash book. So we update the cash book by including it. We go to the second, this one has been sorted. We go to the second item, which is 27,300. 27,300 is actually there. 27,300 is actually there. So that one does not need to be included again. We go to the next item, 30,500. We have that 500 here. This one is missing. So we include it, and this one is for dividends. That's fine. So we have sorted that. Then the last item is for 45,000. 45,000, it is actually after here for Nyango. It is there. So that is now that. So every item that is appearing on the credit side, has now been captured in the cash book. So any omission is included there. I hope you have understood how we do the updated cash book. When you are updating the debit side, you go to the credit column of the bank statement and find out item after item, whether if it is here and if it is appearing there. If you find that it is here and missing there, you include in your updated cash. So you go item. And then the key thing, don't do the opposite. Don't do the opposite. Don't come here and confirm whether it is here. You go to your bank statement, get all those items. If 18,000 is here, you confirm whether, so that at the end of the day, everything that is here should be on the debit side of the cash, like that. So we are through with updating the debit side. We now proceed to the credit side of the cash book. And we know the credit of the cash book corresponds with the debit of the bank statement. The credit of the cash book corresponds with the debit of the bank statement. So we shall go to the debit column. We shall go to the debit column of the bank statement and find out whether those entries are captured, and find out whether those entries are captured on the cash book. So on the debit column of the cash book, debit column of the bank statement, we have got two amounts. We have got two amounts, 126,000. 126,000, if you go up there, you can be able to see it is there. Then we have got 22,200. 22,200, if you go to the credit side of the cash book, it is actually missing. So, and that is for bank charges. So you include it there. 22,200.
Excuse, it's 12,200.
It is?
It's 12,200.
Not 122.
No.
Let me confirm.
No.
Yes, it is 12,200. 12,200 like that. Now you have included everything. So I want you to understand the procedure. Go to the credit of the bank statement, confirm whether it is on the debit. Anything that is here but missing here, you include it on the debit. You go to the credit side of the cash book and you update it with items that are appearing in the bank statement on the debit column, but missing on the credit side of the cash book. After doing that, now you can calculate the balance as per the updated cash book. So on the debit side, we have 288. You get a total of 10. If you minus this, you're supposed to have actually 10, 400 also there. So the balance as per updated cash book is 298,200. It is captured as 298. So that it can give us that. So that is how you prepare your updated cash flow. And the policy is go to the bank statement. The credit column of the bank statement will update the debit, and the debit side of the bank statement will update the credit side, like that. After doing that, your next responsibility is to determine the unpresented checks. You need the unpresented checks and uncredited. You need to identify them, and then you will be very, very okay to prepare the reconciliation. So here, the unpresented check, from the definition we give them, They are checks that were paid by the business and recorded in the cash book for that matter, but have not been captured or have not been presented to the bank. They have not been presented to the bank. So the underlying concept here, they are checks that were paid. They were paid, yeah? And we recorded them in our cash book as paid checks. And then when we go to our bank statement, they are not going to be found there. So if we go to our initial cash book and bank statement, we can be able to identify them by the fact that we have said that they were checks paid. So anything that we paid in the cash book, normally recorded on the credit side. So if they were paid and captured on the credit side, they should appear on the debit of the bank statement. So the credit is the same as the debit in the bank statement. Yeah? So anything that is on the credit of the cash book, but is missing on the debit of the bank statement, that particular check is going to be considered and presented. We paid that check, but the person has not presented that particular check. So it is in the cash book, credit side, because that is where we record payments, but missing on the debit side of the bank statement, because that credit in the cash book is the same as the debit in the bank statement. So you come here, Farah is actually there. The other person is F. Eren. If you come here, F. Eren is not found. So the unpresented check is the check for F. Eren. F. Eren, a check of 15,100 that we paid. That's why it is here. It has already been paid, has not been taken to the bank for the payment to be effected, and it is missing. So F. Eren check is unpresented. So we also identify the uncredited check. The uncredited check, we say they are the checks that we have received in the business, but the bank has delayed clearing them, or we have not taken them to the bank. But the underlying rule here is that they are checks received. If they have already been received, they are going to appear on the debit side, because that is where we record the receipts in the cash. So any check that is received and recorded here, but missing on the credit side, because a debit in the cash book is a credit in the bank statement, that particular check is going to be considered and credited. So leave around the balance. This check for Tinjoro, we have it here. C Anyango is actually here, 45,000. Then we have got a check from A Jebet, 29,200. That particular check is not found anywhere here. 29,200, we cannot find it here. So that check is credited. A Jebet of 29,200. Then you are done. The moment you have identified the two checks, then you are done, and you can now prepare your reconciliation. So this is how it is going to appear. The bank reconciliation statement. The bank reconciliation statement will be like this. We can start with the balance as per the updated cash book that we found here. Balance as per the updated cash book. That balance was 298,200. Then we add unpresented checks. We add unpresented checks. Unpresented checks is this check for F. Eren of 15,100. You add that plus 15,100, you get 313. Then from there you less uncredited checks. The uncredited check we we have found it is this one for AJBet. We received it. It has not been credited in our bank account, 29,200. If we minus that, minus 29,200, we get 44,100. That is the balance as per bank statement. Balance as per bank statement, you get it like that. 284,100. So understand how we flow. Understand how we flow. The first thing, you update the cash book. Updating the cash book, you start with the closing balance, and the closing balance is the current balance carried down. If it is on the credit side, that balance carried down. If it is on the credit side of the cash book, just to know it is a debit balance, you record it on the debit side. If the balance carried down is on the debit side of the cash book, that balance is a credit balance, then you record it as balance brought down on the credit side. Then you include now the items that are missing in the cash book, but they are in the bank statement. And I said here,
excuse me, AJBet is 39,200.
sorry?
AJBet is 39,200. 200.
Different amount.
Yeah, you've written 29,200 and credited checks.
Okay, let me check. AJBet is 39,200. If I minus 313, 300 minus 39,200, it is given us 274,100. Thank you for noting that. So I was saying, when you are updating your cash book, you go to the opposite side. If you are updating the debit, you consider the credit column of the bank statement. Whether anything that is on the credit of the bank statement is captured here. If there is anything that is appearing on the credit of the bank statement but not on the debit of the cash book given, you include it on the debit side. Then you go to the credit side of the cash book. If there is anything that is appearing on the debit side of the bank statement but missing on the credit side of the cash book given, you include it there, and then you calculate your balance as per the updated cash book. For unpresented and uncredited checks, they are items that are in the cash book. Remember when we were talking about reasons as to why we have got differences in the bank statement and cash book, we gave two reasons. Number one, items in the cash book but missing in the bank statement. And those items that are in the cash book but missing in the bank statement are uncredited and unpresented checks. They are already in the cash book. That is the key thing. Because they are already in the cash book and they are missing in the bank statement, we cannot use them to update the cash book. We can only use them in preparing the reconciliation. But now, how do you identify them? For the uncredited checks, these are the checks you receive. So they are going to be found on the receipt side of the cash book, but they miss on the credit side of the bank statement. They are on the debit side of the cash book, because that is where we record the receipt, but miss on the credit side of the bank statement, because the debit of the cash book should have the same with the credit of the bank statement. For the unpresented, these are the checks that we paid and we recorded in the cash book, but the checks have not been presented to the bank for the same entry to be captured on the debit side of the bank statement. So you would compare anything that you have on the credit side of the cash book, but is missing in the bank statement of the debit side or debit column at the end of it. And then the other thing, the balance that you get here, the balance as per the bank statement, which we have computed as 274,100, should be the same as the balance that we have here. Should be the same as the balance, the last balance Remember here we have got the balance. The last balance should be the same as what we compute there. So for the bank statement, it is normally going to be like this. So the last column is the balance. So we started with a balance of 318,500. Then there was a deposit of 18,000. So 318 plus 18 gives us this 336,500. Then we received another 27,300 from Europe. We get this. We received another one from dividends. We added, we get this. Then we paid Farah here. So it is this minus this, you get this. So the balance, it is just an addition and subtraction of what is happening here. So this one is a receipt. Credit in the cash, credit in the bank is actually a receipt. So anything that is credited in the bank, it is money coming in. So this one plus this balance gives us this. This one minus this one, which are the charges, you get that. So at the end of the day, you find that the last balance in the bank statement is the gross balance, and it should be the same as what we have found on the other side. So on the statement or the document that I shared with you, we have got the two formats. We have got the two formats where you are given the statements and where you are given the extras. I want you now to go and try, because that particular question is, you can mark for yourself. You can mark for yourself. You can mark for yourself. You just compare the balance as per the bank statement that you have calculated and the one that you are given in the question, whether they are the same. And if they are the same, you are actually correct. If they are giving different figures, then something is wrong somewhere. But some cases, the questions are wrong, but very rare. So it is a self-explanatory question, and you can actually be able to assess yourself on that. So otherwise, that is what we can discuss at this point. And I want to end my class at that point, unless somebody has a question or there is a clarification that somebody needs. So if there is none, you try those questions, and that will mark the end of this particular chapter on bank reconciliation statement. Next week, we shall go to control accounts. We shall go to control accounts. So enjoy your afternoon.
Thank you.
Thank you. Thank you.
Okay.